Alrighty, what is going on, traders? Welcome to the first ever market coverage of FOMC. I'm your host, Kevin Dubrisky, and coming up, we have FOMC meeting at 2 p.m. Eastern. Now, unfortunately, Fed's really looking to hold rates steady, so we're probably not going to see a shift there. But what's really important is what Mr. Powell, who's already speaking, has to say. Now, he's not going to cover anything just yet because right now he's just speaking to the press. And we could have this run up as well because remember, anything he says, being the Fed chairman, is going to have a big impact on the economy, right? And that's why we use tools like Market and the Fed Watch tool. So let's take a quick look and see where rates are currently sitting at, and then we can pull up Powell. If you guys want, let me know in the comments. I'm going to unmute it for a second. Let me know if you could hear it.
So that's a small part that's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrews.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule?
It's important.
And I'm just curious why the Fed's been so reticent on such a pivotal matter.
Okay, so he's trying to not address some of the larger questions.
Here, Andrew.
He's asking about the tariffs.
We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussion. I'll give you a mulligan now.
Thanks. I don't know if that means I get 3 questions, but
just one more.
I guess I wanted to come back to the 1990s question.
We're going to cover some markets. We're going to see what markets are moving right now.
What is happening in the economy right now?
We're going to see how the FOMC meeting comes out.
I don't think it rises to that level.
All right, we're going to mute that for a moment, put that in our corner. We're going to keep an eye on market now. Quick analysis on what's really happening because we have a little bit of a mixed bag of what's going on in the economy and in the whole world, and that's what's having a big impact on things like the ES, the NASDAQ, and gold right now. In fact, if we take a quick look at our charts, I'm sure as many of you have looked this morning, the NASDAQ took quite a hit this morning, and gold, same thing. It was rocketing up over the pre-market, has been moving pretty consistent. Now, over here, we took a big hit. Now, let me tell you guys how and why this happened. So, if we come over to our news feed on market, high impact, Mr. Scott Bessent mentioned about the U.S. Treasury Secretary mentioned about the U.S. dollar. And we're going to see we clearly had a lot to say from around 10 o'clock to 11. U.S. Treasury Secretary Bessent on Fed spoke with Trump on Fed chair on Tuesday, not intervening with currency markets to support Japanese yen. So a lot was said regarding the USD and some other currencies. And what that did was that gave a spike on gold. I'll show you guys right now. The spike on gold to the downside and a spike on the dollar to the upside. We saw the dollar spiked higher. Now, with that, the dollar has been making some higher highs, while gold has also been trying to make some higher highs. So we do want to keep an eye on this FOMC meeting. However, we got to remember it's most likely not going to have the biggest of impacts for 2 o'clock. We're really waiting for 2:30 when Powell gets on and he has a meeting and he says going forward, we're either going to do one of 2 things. We're going to remain hawkish. If we remain hawkish, that could sort of keep these markets in a slump like we've been seeing. Or we could shift into more dovish tone. Now, what we saw last year, I'm going to show you guys on the trading view chart, was once we had we come to the daily time frame, when we had those catalysts, we had 3 consecutive rate cuts from September, October. Now, when was it? Let's see. Again, that's what we could use market for. We're going to come to our economic calendar. Or actually, we could come over to economy. And from here, we could see all of our different charts telling us how markets and different data circuits are going. So interest rates are on a decline. We see that we had those 3 consecutive rate cuts. What's up, Jack? What's going on, man? Guys, make sure you smash that like and subscribe button. This is going to be a killer episode. Join me Tuesdays and Thursdays for Market in the Morning. That's right. We got an episode tomorrow, and I'll see you guys all there. So we had a rate cut in September, October, and December. So we had 3 consecutive rate cuts. And what that did was it gave us a very strong move on the markets, right? From September to December, very bullish for the most part. But once we had that final cut come in, market sort of ran out of optimism because yes, we were still cutting, but that was sort of said to be the final cut for now, right? Powell said this is it for now. We're going to take a breather. We're going to wait. Now we want to make sure, is he still in that let's wait phase, which can keep us within this range right here on the NASDAQ, guys. I'm going to turn this alert off so it's out of our chart. But look how range bound we are right here on the NQ, right? This is the NASDAQ, QQQ, whatever you want to call it. This is the tech sector. What's going on, man? How are you? We're very range bound between, we can call it 25,100 to about 26,200. So within this range, we see that buying the lows, selling the highs, that tends to be the goal right now. What can break us out of this range? Well, it's not going to be something boring. It's not going to be something small. It's going to be something big, right? That's what we mentioned, catalysts. Well, guess what today is, guys? Today's not only FOMC. It's not only FOMC meeting afterwards with Powell speaking at 2:30, but we also have some major earnings after the bell too. So with big tech earnings, Powell meeting, this could be enough to give us a big catalyst to break these highs and make some new all-time highs. Guys, what do you think? What's up, Aaron? How are you? How's everybody doing, guys? I hope you're excited. It is 1:56 right now. We have Powell over here, guys. I'm going to
an expectation of higher growth or something like that, and that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Just want to make sure it's working.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
Or maybe you need me to pause it to ask, but can you guys hear that audio when it's playing? Let me know. That way I know that everything's working, because what we're going to do when Powell goes live at 2:30, so right now he's live, he's addressing the media after a 2-day Federal Reserve policy meeting. This isn't, yeah, it's good, perfect, man, awesome. This isn't our big meeting, right? This is not the big news catalyst we're looking for just yet. That's going to be after the FOMC meeting. So what we can do is we're going to put Powell in the corner over here in his little timeout corner. We're going to keep our trading view up on the right-hand side like this, and I'll show you guys exactly how we're going to line it up. So that way we could watch for the reaction on things like the NASDAQ. We'll jump on over to gold as well. I know a lot of people here trade gold, and we can keep an eye to see the reaction that markets have. Hear it perfect, guys. That's awesome, man. Beautiful. So guys, market is the tool that we're going to need every day in the market, because if you're a day trader, whether you trade SPY and you trade options, or you trade futures, the ES, or even if you trade Forex, guys, no matter what you trade, if it's something with heavy liquidity that's considered a market or a market mover, you're going to need to understand things like fundamentals. Background music, please, and we're good to go. Background music. I don't have is there background music playing right now? I don't think there's background music playing right now. I think we're okay. That could have been from the stream. Yeah, absolutely, guys. Dude, it's a pleasure. I'm happy to do this. This is our first ever Market AI. So Market AI is this platform we're using right here. This is the first ever Market AI FOMC coverage. We have 1 minute. We're going to keep an eye on those headlines, and we're going to see what happens. So let's see. We have economic calendar from the live for sure. Oh, I got you. Yeah, you know what? I could try. I could decrease the audio period, but I can't do just the music. Will you show the live update? Absolutely. Oh, I got you guys. So here comes, let's see, 2 o'clock. Oh, you know what? I got to turn on none. For whatever reason, guys, when you use a high advanced calendar like Market, unfortunately, it sees FOMC meetings as none instead of a high priority. That's just because of the data platform we use. So 2 seconds. 1. Here we go, ladies and gentlemen. It is pending. Let's see how it comes in. Absolutely, guys. My pleasure, guys. Here at Market, we try to give you guys not only the best information, but the best platform to use too. And just so you guys know, I do have another window where I have Powell speaking as well. So in case I do hear anything of interest, I will bring it on over. But as of right now, let's check our news feed. We could even refresh just to make sure we're not missing anything at this time. And nothing major came out just yet. Let's see. Fed holds rates. Looks like we're getting something. Okay, looks like I got an alert here. I don't know where it's loading up. Should be up in just a moment, but it looks like the Fed is holding rates at 3.5 to 3.75 in a 10-2 vote, with Moran and Waller dissenting for 25 BPS. Says inflation, let's see, says inflation still somewhat elevated, economy expanding at solid pace, job gains low with unemployment showing signs of stabilization. Should be coming up in our market terminal in just a moment. Here we go. Fed upgrades assessment on economic activity says it has been expanding at a solid pace. So now we can take a look at our markets, guys. See how our market's reacting to that. Do they agree that we're moving in a solid pace right now? Well, like I mentioned before, we didn't really get the biggest reaction to FOMC because we were expecting that we were going to hold rates. We're not cutting rates. We saw that with our Fed Watch tool. We were looking at a 97% chance that we do not cut rates today. And that's right over here. Now it's even less. It's a 0.55 because they know at this point they just announced they're holding. Because they're holding, that's more bearish on the market. And as we see, we are getting a bit of that bearish reaction. It's Fed fund target. Let's see. Yeah, let's see. Check out that Fed fund target as well. Let's see, Fed fund target. That was within range, so that's nothing that's going to give us, oh, it shows below range a little bit. Actual 3.63, 3.625, bearish on the dollar, which would be bullish on gold, but nothing crucial. This is not something that's going to be major in a sense that it'll have an impact on the Fed rates. So guys, right now we had a little bit of nothing. Powell speaks in about 27 minutes. So guys, make sure you stick around. We are going to cover that here live. Drop your thoughts below. Do you guys think Powell's going to go more dovish, or do you think he's going to stand his ground and say, we don't need rate cuts right now? Because right now, unfortunately, the government, the president is trying to take a big hold. They're trying to make it an impact, and they're trying to sort of sway the Fed. Now, the Fed should be completely separate from the government, but what we're seeing is a little bit of an impact from the government. I'll show you guys exactly what I mean by that, because the other day we actually had a headline that ended up moving markets because of what Dissent had to say about rates, right? And it's very important. Let's see if we could find that. Rates. Let's see. So it was yesterday. Let's see if we can find it. It was yesterday. Trump on Fed wants interest rates to go down. So Trump's stance is, I want interest rates to keep going lower. We need to make things more affordable. But the Fed and Mr. Jerome Powell is standing ground saying, no, I am not going to listen to you. Sorry, but we're holding rates steady. We're not cutting them right now. I don't see any inflation reason to. I don't see any job reason to. Yeah, Powell's holding his ground. Been pretty neutral. Okay. Also he doesn't want to be bossed around, man. That Fed should stay separate from the government. Always should be. Always has been. Always should be. Right? So let's see. So again, a small reaction we see on the NASDAQ. We got about 77 points. Now, it's funny. We call that a small reaction, but the only reason that's really a small reaction is because, let me just fix this up a little bit. Only reason that's really a small reaction is because in relation to the bigger moves we've had all day, we just moved down 180 points. So to see a range, sure, within this one candle, we moved that 77 or that 80 points, but that's not going to give us that much insight, right? This right now just tells me inconsistent. It tells me we got what we were expecting, nothing more, nothing less, which again will lead us to stay within a range on something like the NASDAQ. We could look at something like gold too, and we're going to see something very similar. There hasn't been any big push on inflation. There hasn't been any big red flags to cause the gold to skyrocket even higher. But we got to remember too, gold is at all-time highs. We're looking at 3, 6, 7 green days in a row. If we can close green today on gold, and if we're looking at the NASDAQ, same thing, guys. We're on day number 6 right now. So very strong bull trend. A lot of people buying at these highs, but without a real catalyst, what is bringing us higher, right? And that catalyst has to be either Powell coming on at 2:30 and saying, you know what, we're probably going to look to cut rates by 25 BPS by March. And then markets are going to say hallelujah. They're going to shotgun confetti everywhere. And then guess what? Later, after market closes, we have some big earnings reports as well. Let's see if we could find those. Actually, we can find those right here on market. Come down to earnings. Today, we have Microsoft and Meta after hours, guys. Those are 2 of the top 10, 2 of the top 5 holdings on the S&P and NASDAQ. If these show double beats, that's great. We're sort of expecting double beats at this point as they've been consistent and strong companies with the whole AI situation going. However, what's really important when it comes to these earnings on big tech isn't so much the earnings report, but the earnings call afterwards. The earnings call afterwards gives us some forward looking on that company. Do they have strength? Do they have a good roadmap ahead for a good construction on AI? Or are they going to keep it a little still? And that might drive optimism lower. So we always have to look at it from an investor's standpoint that, of course, we're expecting a big company like Microsoft and Meta to do well during earnings per share, revenue, but how are they looking going forward? So very important stuff, really great stuff. And guys, make sure you like and subscribe, man. We drop knowledge like this every Tuesday and Thursday here on the market stream. I do a live stream Tuesdays and Thursdays from 8:20 to 9 a.m. Eastern, right before market opens. We cover some fundamentals, so any maybe economic data that comes out. We cover some key levels, give you guys some trade setups. It's the place to be on a Tuesday and Thursday, guys. Something to note on the NASDAQ, I have marked out as a gap fill level from yesterday. And I do know that it plays out pretty well as a great strategy. And with the news, with all these catalysts, I was hoping to see a bit of a pullback before we ended up getting those earnings calls and earnings reports, right? Because I'm expecting bullish reactions from them. So I'd like to see markets sort of position themselves for that bullish reaction. Guys, let me know, are you taking any trades right now? Are you taking anything into Powell's speech? We got to remember he is speaking in about 20 minutes. So let me know what you're trading, if you're trading, and have you traded today? And guys, if you're not using market, make sure you use market. I'm going to show you guys, while we have a little time between the FOMC and Powell speaking, we'll cover a little bit of market AI. That's the MarketEdge.ai terminal. Gives us a good fundamental and a bit of a technical standpoint too, in a sense of it gives us a day trading bias, a swing trading bias, and some great key levels as well. So what we have here is I have my watch list. I have the ES, the NASDAQ, gold, silver, the dollar, the Dow, Bitcoin, and whatever else is important, right? I threw up Apple on here too because Apple's also going to have earnings soon, and it's important to know what's moving it. So for something like the ES, it's going to give us a description. ES dips to 7,002 on Iran threats. Bank of Canada uncertainty ahead of FOMC decision. So we have a lot of uncertainty. I know as a trader and as somebody with experience that uncertainty drives markets lower. But you guys, even if you're a brand new trader, if you use something like market, it will give you that information. It will tell you uncertainty gives us a slightly bearish bias. Yeah, man, we're just waiting right now, waiting for Powell to speak. That's going to be 2:30. It's going to be really, really important, guys. It's still the beginning of the year. This could really set the tone. So any big headlines? Fed vote in favor of policy 10-2 with governors Moran and Waller dissent in favor of 25 basis points. We knew that. Fed upgrades assessment on economic activity, says it is expanding at solid pace. So it doesn't seem like the whole tariff situation has been impacting the economy just yet, right? We have to really see, is that going to roll over into this year where we start feeling much, much higher prices? Companies feel a squeeze on their margins. And that's also where the earnings calls come in, guys. You listen to these earnings calls and those CEOs of these massive companies are there saying, listen, our margins are starting to widen. This is great. Or our margins are getting tighter. This isn't looking too good. We have to start to outsource. We have to make some changes. Whenever you hear change, connect that to uncertainty. That is not good. But when you hear strength and a strong roadmap, then you know that's optimism in the market, whether you're talking about a specific company like Meta or you're talking about a full market outlook like the S&P or NASDAQ. So let's take a look. ES pulls back 7,009, Trump-Iran rhetoric escalates with Iranian threats. So what's supporting the bias to the downside? It'll give us a little list here. U.S. consumer confidence, 84.5 versus 94. Now, consumer confidence, I want to say, was at its lowest point since, let's see, I want to say like 2024. Confidence dives to more than an 11.5-year low. That is insane, guys. Consumer confidence, which is just what it's called, consumer confidence. That's us day-to-day consumers. Their confidence in the market, in the economy, fell to an 11.5-year low. It's 2026 right now. That means it fell down to a 2015 low. Well, what's that mean? Well, let's check it out. The headline signals sharply deteriorating U.S. consumer sentiment to an 11.5-year low. Let's see, driven by labor market worries, persistent inflation, high borrowing costs, and policy uncertainty from tariffs, politics, and war. So again, all of those things we hear about in the news, they're not just headlines and they're not just topics, guys. Headlines move markets and headlines affect the economy. Looking for the long at some key level due to the geopolitical situation. Yeah, I would definitely think more longs on something like gold due to everything going on. But with the ES and NQ, I'd really want to be careful that we're hitting that high on that daily range. And with the Fed staying hawkish, it could just keep us in that crappy price action like we've been seeing in January. So this bearish sentiment, this bearish development threatens consumer spending, 70% of GDP. That's big right there, guys. Again, this is information that you don't need to go get a degree to understand or learn. 70% of the GDP. We know that that's another economic reading. That's the growth GDP. But and we'll get into that in just a moment here on market. But it has impacts on everything. Raising recession risks as expectations index stay below 80 for 12 plus months. Okay, so that would be if it gets below 80. It hasn't hit below 80 yet, but it did take a hit. Where was it? I want to say it was at 84, right? It was at 84.5. So with that big hit in the consumer confidence, should we really be holding rates, right? Or is Powell going to say, hey, consumer confidence sort of gives me a bit more insight and clarity that things aren't as settled as I'd hope they'd be. We might possibly be open. Even if he says something, guys, we have to remember, uncertainty triggers by just one word, just like optimism could trigger in one word. If he says we're possibly open, that's optimism. We're possibly open to rate cuts. Great. Markets are going to go crazy at that point. But if he says we're going to stay put, we're not going anywhere anytime soon, right? And we might get some type of impact from the earnings after the bell, but that might not be enough to give us continuation. So other than that, consumer confidence, we have some good economics. And again, all this information, super easy, marketedge.ai. You guys could download it. You could use it. It's a website, marketedge.ai. Sign up for it. Save 10%. You use discount code KEV. But definitely recommend using it, man. I use it every day. It's like an economic calendar, 10x. It's like TradingView times a billion. Gives you a market AI sentiment index. And again, you hover over these bubbles and it'll tell you exactly what's impacting the market right now. Fed decision uncertainty. We were just talking about this. Today's Federal Reserve decision and press conference represents the primary near-term catalysts. Like I mentioned, guys, markets cannot move just because markets are moving. Candlesticks don't move markets. Volume and catalysts move markets. What falls under both of those terms? Well, that would be optimism, fear, and uncertainty. So let's see. Markets are pricing in policy guidance and tone rather than rate changes. Options pricing implies S&P 500 moves 80 plus points into Friday expiration, reflecting elevated and uncertainty around Fed communications. So again, we're sort of in that cautious optimism phase where we have that big tech coming. We have those earnings coming. possibly a shift in the Fed. And we have to remember, too, we might not get a shift with Powell, but Powell's term ends this year. And Trump is picking a new Fed speaker. And that could be somebody that might be a bit more dovish in general. And if that's the case, that's going to really have an impact on markets. It is 2:15, guys. We got about less than 15 minutes for Powell to go live. Definitely would love to know what you guys are looking at, where you're looking at. I would like to see NASDAQ 25,990 down here. Now, this was a previous day's low. Previous day's low is all the way down here. Actually, let's see. I think I have to update my previous day high and low on NASDAQ. I do. Previous day high, previous day low. It's important to have good technical levels to get an idea of where price is trading and the trend, but it's also important to understand if your fundamentals are lining up with it too. Let's see. Gold, we can take a look at gold. Now, gold's going to give us a little bit of a different fundamental breakdown, and that's because gold has a bit more of a widespread range in a sense that if something happens around the world, gold could feel it, even if it doesn't seem to have a direct correlation or response to the US, whereas ES and NQ, those are a lot more connected to the US and US economics and data. So when we look at gold steady at
the opposite of any work platform we tried in the past. We tried other work management platforms,
Trump's next
not naming
attack
names.
on Iran
They
will
all
be
suck.
far worse. So again,
Monday,
this is
total
supporting
opposite.
gold to the
Didn't just
buy
work,
side.
it spread.
When we
And
hear
people became
something
Monday
like
evangelists.
an
And you know why?
attack, we're going to attack
Because people
Iran,
actually
war, we're going to strike.
liked using it.
That's uncertainty.
It's not a chore.
That's worry.
It's
right? People are
intuitive.
worried
You don't have to
about
force
that.
anyone.
That forces
They're on
people
board.
into
You can really
safe
see that
havens,
Monday
right? We hear
care about their
words,
user.
we
The
wanna think
user
we want
is
to be
king.
safe.
You can create
That's gonna be a
workflows
safe
yourselves, no
haven,
IT,
right? And that's
no
where
admins.
gold
And that's why we
these
love it.
other
There's no
assets
roadblocks.
become
Everything can
safe
just be
havens.
done
Gold,
instantly.
yen,
We have
and
people
Swiss
creating
franc come
workflows
in.
and showing them
See
off
gold
around the
surging
company.
while yen and
They
franc
take pride in
collapse
it.
signals
I know this sounds like a
investors
commercial,
fleeing
but honestly,
dollar
I never
assets
expected it to have this
amid
much influence.
geopolitical tensions and fiscal credibility concerns, not traditional risk-off positioning. So that's pretty important right there, not traditional risk-off positioning. So that also gives me a little insight to say, hey, listen, they're not completely risk-off in the sense that they're just dumping and they're trying to protect themselves. But this could just be heavy risk-off for gold because of everything going on in the geopolitical atmosphere.
That's why they're Scribe. Go to scribehow.com.
We do have a news tab down here on
Capture,
market as
do the
well, which is
task
pretty cool.
once,
Recent
and
news
Scribe
and
will create a
summary.
step-by-step guide
Indices
you share
performance
automatically.
really breaks it
You ever
down
walk
very
someone through
simple for
a
you.
giant
Economic
process
data,
and know they'll forget
January
half of it?
PCE inflation held steady
Scribe
at
puts
2.8%
everything
year
they
over
need to
year
know.
for both
Instructions,
headline
pictures,
and core,
videos,
meeting
all on
expectations
one
and boosting
page. So the
market
next time they ask, you can
confirming
just send the link.
economic
I know what you're
stability.
thinking. They
So
still
before we were looking over consumer confidence
Check
is
this
very
out.
weak,
Scribe
but
will
our
literally
core
guide them through
PCE
it.
was
But
actually holding
warning,
somewhat
they're
steady.
going to think you're a genius and ask
Personal
you how you did it.
consumption
Just say
rose
Scribe.
0.5%,
Scribe
supporting
instantly turns
higher
any
for longer
workflow into a
rates.
step-by-step
So
guide.
there, right there,
You never have to explain
that's
it again.
supporting
Go to
higher for longer rates.
scribehow.com
If
and
we're
try it for
holding
free.
steady,
You don't even
in
need a credit
stable
card.
economy, there's zero reason to cut rates. So again, this is a little bit of a red flag. Does Powell want to come out and say the same thing we've been hearing? And
If
that's
you
that
or
we
a
are not
loved
cutting
one
rates
were at
anymore.
Northwell Sleep Center or Stars.
Oh, that's playing. Sorry about that, ladies and gentlemen. Did not realize that was going. Is he getting on? 2:18. He'll be on soon, ladies and gentlemen. So we'll keep an eye. We'll keep Powell down here. Background noise, please check. I got you. Yeah, that's the this is the Powell meeting. So we're going to live stream the meeting here. We're going to listen to what he has to say, and we're also going to keep up our high impact news headlines so we can sort of see that they match and make sure that we're picking up on everything that's going to have a big impact. Because guess what? All it takes, like I mentioned before, is one catalyst, is one term. I'm open to rate cuts. There's a possibility of future rate cuts. Anything to drive optimism, right? Markets are killing for some optimism right now. Like they're just dying for it. That's why we've had to slow grind up for about a week now, and really within a range for quite some time. Look at that, since about December, late December, right? Yeah, I got you guys for sure. So unfortunately, the way I'm seeing this with Powell is I'm seeing that we're going to reject this supply area. And I have this marked out from the daily time frame. We see that this is a clear area of resistance. We were trading in it. We rejected. We're back in it again, and we're rejecting again. With the rejection we've already had, plus Powell's speech, with most of the economics starting to look a bit more bearish, which would be, again, staying hawkish, I really am a bit more concerned that it's time that we sort of try to reverse back down for a little while. Even if it's a short-term pullback, we have been making some higher lows, higher lows, higher lows. So, we do have until this level to still technically be bullish. If we hold this higher low right here, 25,000, we're still creating a higher low. If we want, we could play it a little bit safer too and put one at 25. Looks like it is 25,365. So those would be the two major areas of support I'm looking at for something like the NASDAQ. You guys want me to cover gold a little bit before Powell starts to talk? Get a little insight into it. Man, look at all these dashed levels are all alerts. Those are alerts at levels of demand. Those are support zones that I was looking to go long on gold, and yet gold just decided to keep on running without pulling back. And that's what gold has been doing, up 15% in a matter of 2 weeks on heavy metals. That is mind-blowing, guys. And let's see, year to date, it's probably already up a good percent too. Year to date, up over 22%. So guys, can Powell be the pivot that markets need to say, oh, hold up, we might not get any rate cuts for a little while. Let's hold off. Let's sell off. So let's check March. Let's look at March right now, guys. March's chance for a rate cut. So this would be our target rate in BPS. So if we were to get a 25 BPS by March, this would be very high up. We see that right now we have an 86% chance that the target rate probabilities for March 18th's meeting, we're still going to be at no cut. We're still hawkish. Again, this can shift in a matter of just one sentence with Powell speaking today. And that can shift the whole market and give us some insight into a good trend going forward. Let's see. Powell's still getting ready. He's not live yet. We could also take a look at something called the VIX, guys. If you do trade the SPY or the QQQ or ESNQ, it's important to keep an eye on the VIX. Just like if you're trading gold, it's important to keep an eye on the dollar. As we see with the VIX, it's sort of been on a grind higher. We see that it's creating some higher highs, some higher lows. So would almost want to see VIX spike up, which again would be a bit more of a bearish reaction on ES and NQ, on markets. Still 8 mint pal. Can you check AUD? Yeah, I got you. Let's see. Let's put AUD. See, guys, if you guys have any quick little ticker recommendations, drop it in the comments. Let me know what ticker you guys trade. Would love to know what a majority of you guys trade, especially because, like I said, guys, you guys are going to join me for Market in the Morning every Tuesday and Thursday. Tuesdays, we have the one and only Noab with us. He is one of the co-founders of Market AI, and he goes over some of the fundamentals, the platform, and we go over some key levels and trade setups for you too. And same with Thursdays. Usually it's me and Jeev. I think this Thursday it's just going to be myself. Jeev is another one of the co-founders of Market. Let's take a look at, you said you wanted to look at AUD, CAD. Let's do it. So what I like to do, guys, best way to look at an asset with Market is to add it to your watch list. AUD, CAD. Great. And now if I want, we could drag it. So I'm going to show you. So if I want it towards the front, I'm just going to click it and drag it. So I'm going to click it and drag it on over. Now we could take a look at AUD, CAD. It'll load in for us. Guys, good morning, good afternoon. I'm used to live streaming in the morning. Give me half a second. Okay, there's AUD, CAD stable at 0.95 post Bank of Canada hold. And again, same thing. I'll give you a quick little rundown if you want to take a quick look here at the overview of it. So we see Australia Q4 trimmed means CPI is up 3.4% year over year, beats their 3.3% forecast. So again, it's not US because we're looking at Australia now, Australian and Canada, the pair. So yeah, guys, definitely if you trade pairs, Forex, I would 1,000,000,000% recommend using Market because it gives you that insight on every economy. It's not just, oh, it's great for ES and NQ because it's US based. No, guys, it is everywhere all at once. everything you need to know from every type of data terminal, pulled into one and given to you on a silver platter. It really doesn't get much easier than this when it comes to finding fundamentals behind almost anything. I even keep up the dollar on there because I also want to know, okay, well, what's going on with the dollar? What's up, Ozzy? Good morning. Good afternoon, man. Hope you're ready for FOMC. Mr. Powell speaks in T-minus 5 minutes, guys. 5 minutes, Powell is speaking. We're going to have him up over here in the corner, and we'll keep an eye, we'll keep an ear out, and we'll see how markets react. I'm going to put gold back over here, guys. Gold that I trade is GC. That's GC for gold futures. A lot of people do trade XAU USD. That's going to give us very similar price action, as you see right there. So it will be the same reaction no matter what, just so you guys know. So let's put up our GC one more time. Wonderful. All right, guys. Guys, last chance. Drop your thoughts. What do you think? Is Powell going to flip dovish again? Or is he going to stand his ground and say we're stable? Economics are stable right now. No reason to keep cutting rates. We went over the market fundamentals. We know that for the most part, things are leaning a bit more towards them staying hawkish. So now the question will become, do they stay hawkish? Does Powell make a change? Does he fall under pressure to the government trying to take hold of what the Fed is doing? Or can he hold and stay? Now, just remember, guys, Powell's term ends midterms, right? So Powell's term ending, Trump's going to elect somebody new into the Fed. That's somebody new. Right now, Powell is one of the main reasons we're not getting that cut. He's Fed Chair Jerome Powell. He's saying we're not cutting rates. He's the leader of these meetings. He's the head of these meetings, and it has nothing to do with the government. Trump can't say cut rates right now, and he has to do it right now. Trump can say, I want them to. He can say they should. And guess what, guys? Because Trump is the president, that's going to have an impact. I showed you yesterday. He mentioned Trump on Fed. We'll see if we can find it. Trump on Fed, want interest rates to go down. He said this yesterday, and markets gave us an extremely bullish reaction in the morning. It has around noon actually this happened. It has nothing to do with the Fed actually cutting rates, but has everything to do with what President Trump is saying he wants done. So very important to be ahead of the headlines. Market is the tool to use to stay ahead of the headlines. And Powell speaks in 2 minutes, guys. Look at all these eager people here. Guys, I hope you're all excited. Data dependent, and he will be neutral. Yeah, I'm thinking the same thing. I'm thinking neutral. What do you guys think? Let me know what your feel is on Powell today before we get that push. And guys, don't forget, follow me on social media. Is @tradingwithkev. It's right over here. I do appreciate it. I post daily market content. So I've teamed up with Market, and I post different types of fundamentals, what's going on, what's driving markets, and what you should know about markets. I feel like it's extremely important. I wish I had a channel like my own when I was starting out as a trader. So that's why I put it together, to give you guys that insight that will really help keep you ahead of the game. Like everything we're covering here, guys, if you're just joining now, we've been covering great pieces of information. Guys, let them know in the comments. And it's important to know these things because as traders, day traders, swing traders, investors, we want to know what's really behind markets. Sure, candles help, but candlesticks don't move markets. Candlesticks are the reaction to the headlines of markets. So very important stuff, great stuff. Smash that like button, guys. Run that up and make sure you're subscribed. Tuesdays and Thursdays, we do market in the morning. That's where I go live from 8:20 to 8:30. And guys, Powell speaking very soon. Very soon. I got to find Powell's speech. I got to find his speech live on another server. Because, let's see, is he coming? Nope, on Yahoo. This is Yahoo. Because for whatever reason, my audio won't let me hear the audio, but it will let you guys hear the audio. In my opinion, that's all that matters. But I'd rather be able to keep up with you guys too. We can put the closed captions on. Oh, let's try to make them bigger. Can't make them bigger. Oh, wait, maybe. Font size. Here we go. Let's do 200. Let's really make it big. No reason to keep it small. And we could even make it a little larger here too. Again, we'll keep the chart on the side. so we could watch the reaction. Already getting a bit of a bearish reaction there. He's about to speak right now. And let's refresh this and go live. Make sure we're not missing anything. All right, ads, come on now. And don't forget, we're going to also keep up markets headlines because we want to see those live news feeds coming out when they come out. All right, skip the ad. Let's go live. You guys let me know if you could hear it. He is not speaking yet. Clearly, he's not at the chair. Guys, let me know in the comments. Thumbs up, thumbs down. Can you guys hear it? Yes or no? I don't even know if it's giving audio right now. It is. I think we're good. It says he's starting the press conference. Come on, buddy. Stuck in the bathroom. J Money, yes, sir. Bullish Bears representing. Yes, sir. I love it, bro. Getting ready to toss my Mac out the window once. Big day. Okay, here comes the good morning, guys. Good afternoon.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
Okay, here we go.
The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over
Leaving it
the
unchanged.
previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued
Stability.
to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be
growth.
stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months.
There it is.
Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months.
Is that better? I'm sorry about that.
Inflation has eased significantly.
Here, I'm going to mute myself.
2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term
Could you guys hear the
expectations have declined from
did you guys
last
hear
year's
him?
peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Chris Rugaber at Associated Press. Thank you.
Let me unmute myself for a moment. Guys, that's sort of the meat and potatoes of the Powell speech. Now, let me know in the comments, do you guys want to stay on for the questions? Sometimes the questions are very important. Here, this one actually is right here.
The Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history.
Impact on, great question. We are going to turn this off for now. We'll keep it muted. We'll put it down to the side for a moment. If anything does come out, we'll at least have it at hand. So impact on silver and gold, man, great question. It's really not giving them much of an impact, right? We heard him very wishy-washy, but for the most part, we heard him say that we're not changing policy. The policy is changing due to our economic data that we've received. We heard him mention a lot about stability. That tells us we're stable. There's no reason to cut rates. He said we're going to look to make changes per meeting. We're not changing any time in between. It's unfortunately not the catalyst we were looking for. We were looking for some type of open to rate cuts, or maybe jobs data came in, the NFP was higher than we would hope. We want to really help the jobs markets. We're going to cut rates, or whatever the case may be. But jobs are feeling a bit more stable. Things are still a bit more okay. They're not really seeing a economic or data reason to cut rates. Just like we covered, guys, before we actually went live with FOMC with Powell, that data was all looking like they would remain hawkish, not cutting rates, leaving everything alone. Distortions in data are no longer material. Powell stating data distortions no longer material signals clear economic picture. So this is him basically saying that he's trusting the data, potentially justifying prolonged pause in rate cuts. Let's see. You guys want to hear?
Activity has improved, clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
So I'm not seeing much really here.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political
clearly my cat's like very bullish on the statement, but I told him that this is just going to keep us bearish. We're not really going to see much. Their policy is staying the same. What made this different, and are you concerned it could
draw the institution further into political debates?
So today,
yeah, they're just gonna keep asking him about his stance on the political, this and that. What do you think about this? What about this probe that's open? What about this on Lisa Cook?
Just not going to. This is
I'm
really
not
about
seeing
the press conference
anything. I'm going to turn this off for a moment. I'm not seeing anything question-wise that is going to sort of prompt an impact in the market. So unfortunately, I think this Fed rate, this meeting was a bit of a dud in a sense that it's not going to give us that catalyst that we're looking for to continue higher. So guys, make sure you like and subscribe, because I cover, market covers everything. And I cover market in the morning. That's every Tuesday and Thursday from 8:20 to 9 o'clock in the morning. So it's before market opens for the New York session. We go over the S&P, NASDAQ, gold. We cover market, and we cover the fundamentals, guys. It's what we were doing here for FOMC. We cover the fundamentals, so we're ahead with the Fed, right? We don't want to be trading against the brilliant minds of traders that are making billions. We want to trade with the institutions, with the data, with the fundamentals. And that's exactly what we put together here with MarketEdge.ai. So guys, make sure you check it out if you haven't yet. You can sign up. The link will be in the description below, and you could use discount code KEV to save 10% as well. But really not getting much of a reaction. It is only, time-wise, it's only 2:40, so he's probably got a few more questions to answer. But at this point, really what I would do, absolutely, yo, I got you guys. It's an absolute pleasure. These calls, these streams, love doing them. Don't forget to follow me on social media, guys. My Instagram is @tradingwithkev. I do appreciate any support. Post videos every day, 20 to 30, 40-second videos, just covering what's moving markets. Like, I'm probably going to make a video on this whole live stream that we did here for 50 minutes, an hour. I'm going to cover it in 30 to 40 seconds for you guys. Say, hey, listen, we're staying hawkish. We're not doing much. This is blah, blah, blah. This is the data that came out. Here's some of the high impact news. And here we go. Incoming data shows clear improvement in outlook for growth. A reason to hold rates steady. So again, we got that data, we got that information, we got this headline for a market. Sure, Powell's speaking right now, and I'm sure we could have heard him say that, but instead of having to keep up all these different monitors, we don't need it. We just need MarketEdge.ai, which is our market AI server, and whichever broker we use to actually execute. So guys, on that note, I appreciate you all for joining. Hit that like and subscribe button. We haven't gotten much. We can hang around for another few minutes just to make sure nothing changes, but we're not getting that catalyst. We're not seeing a big move. So at this point, markets are really waiting for the big tech earnings, right? And that's things like Apple and Microsoft. Today we have Microsoft and Meta after hours. Again, everything I need to know about markets, whether it's stocks, crypto, Forex, futures, market's got the answer. Guys, smash that like and subscribe. I appreciate you all for joining, and we'll see you guys tomorrow for Market in the Morning at 8:20. Peace.